HIMS and Hers Health is nearing a major inflection point. I'm going to talk about this today. The stock is down 30% over the last months. It's been brutal for me and for a lot of HIMS and Hers Health shareholders. Although we're still up 76% year to date, we can't really complain. But it's been a brutal sell-off over the last months. I believe the reason why this is selling off could potentially be nearing the end. The stock is trading at 3 times sales. We could be over with all this drama, with all this uncertainty, and maybe HIMS can get a re-rating to 6, 8, maybe even 10 times sales, as the company is growing 54% in sales. It's one of the cheapest growth stocks in the market, and I'm going to talk about the recent developments and give you my upside potential on HIMS. So I really hope you enjoy it as always. Now, just to give you a quick introduction, HIMS is mostly, you could say, a telehealth company, but they're not just about weight loss. They're into sexual health, dermatology, a lot of things within skincare and acne treatments, mental health, which is huge in the United States, hormone health, and longevity. They have the HIMS business and they have the HERS business for women, which is growing much faster than the HIMS business for men. And now they're not only in the United States, they're in Europe, where there's over 160 million adult population that could be within HIMS total addressable market. This is all new. So this is all going to happen over the next 6 months. And we're likely going to see the effects of that in early 2026. This is a key timeline. And you have Canada, which is all new for the company. They were all based in the United States. Now they're going international. And Canada has 30 million of the population that HIMS could potentially reach. And the company is rapidly growing, 89% in subscribers, revenue 73% growth, and it did decline quarter on quarter, which I'm going to explain to you why and why I'm personally not concerned about it. Now, the main reason why HIMS was down 30% over the last months, the main reason why HIMS is still trading at 3 times sales, despite the company having around 80% gross margins and growing 54% this year in guided revenue. The main reason why this is happening is because of the potential NVO lawsuit. The whole narrative that NVO is going to sell HIMS, is going to sue HIMS because HIMS is mass selling GLP-1s and something within advertising and intellectual property and all these kind of things. And the odds on the betting market that NVO will sue HIMS was around 70%. It dropped from 70% to 34%, and it mainly dropped because of a recent court case between Eli Lilly and another telehealth company that was also selling GLP-1s just like HIMS was. And this is what the judge said. This is not me. This is from the judge. It says personalization does not mean that every compounded medication must be different for every patient. It instead needs only to be tailored to the specific goals of the patient. This is what the CEO was talking about. And to me, again, it's funny how all those bearish on HIMS believe that HIMS invested tens of millions in those facilities, compounded facilities, just to sell something temporary or something that's illegal. I mean, the whole thing was crazy. But the judge also said there was not sufficient commercial injury to Lilly to justify the lawsuit, since Willows, which is the other platform, compounded GLP-1s were prescribed by doctors, just like HIMS. Willows ads did not directly steal sales from Lilly. So the lawsuit between Lilly and other compounded company, just like HIMS and HERS, is not going too well. And to me, again, it's funny how everything is looking. And the main reason why I was not too concerned about the lawsuit, and this is something that's actually funny, is if you look at the whole revenue profile for HIMS quarter on quarter, it has declined quarter on quarter. And this is a major concern for a lot of investors. And many of you guys told me in the comments, but the company is declining quarter on quarter. This is not good at all. I agree with you. That was the first time where HIMS declined quarter on quarter. But if you think about this lawsuit, the main reason why NVO is supposedly going to sue HIMS is because HIMS is illegally or is somewhat mass selling GLP-1s. Okay? Now, think about this a little bit. If HIMS was really mass selling GLP-1s, do you think HIMS would have declined in quarter-on-quarter revenue? Of course not. Why are they declining? Because they're no longer selling mass GLP-1s, which means there's not going to be an NVO lawsuit. This is what I said. And to me, it's simple, but it makes a lot of sense. I said HIMS is going to $100 when the market realizes the growth is temporarily declining because they aren't mass selling GLP-1s, which means no NVO lawsuit. So to me, if there was going to be an NVO lawsuit, it would have happened by now. But there's not going to be one because HIMS has stopped mass selling GLP-1s. And this is why their revenue has temporarily declined. It's not going to be a permanent decline, in my opinion. It's a temporary decline because they're no longer doing it. And I'm surprised that HIMS still is maintaining 544 million because that was a major boost up from them. But now HIMS is moving beyond GLP-1s, which is going to be a transition period. Just like those companies, a lot of the pharmaceuticals, they made a lot of money selling those COVID vaccines. But once COVID was over, their sales went down a lot because they're no longer selling COVID vaccines. So if you compare their period versus peak COVID vaccines, it doesn't make too much sense. And it's the same thing with HIMS. You're comparing them when they were mass selling GLP-1s under the law when it was on the shortage list. Now it's no longer on the shortage list. They're not mass selling GLP-1s. So of course they're going to decline in revenues a little bit, guys. I mean, to me, it was not surprising at all. And this is a transition period that I believe is going to be much better in the first quarter of 2026. Now, in terms of opportunities, there's a lot of opportunities that could come. And this is a very interesting tweet. And it says semaglutide patents will expire in several countries starting in 2026. It includes large countries such as India, Canada, China, and Brazil, and Turkey, which make up 40% of the world's population. And as HIMS is expanding internationally, they can potentially expand into those markets and they can take massive market share. And this is why HIMS will start selling in Canada a generic semaglutide. They don't have to make it in a compounded version. It's going to be generic. And they could do the same thing in India and the same thing in other places. And the main counter argument is you're going to have a lot of competition from cheap Chinese suppliers. And this is actually true, but I believe HIMS's reputation is going to stand out because they have a lot of reviews. They're from the United States. I think, with the reputation of HIMS and all the reviews and the fact that it's well known, I don't think a lot of people will go cheap on their health. They will likely be going with someone that's trusted. And I think this is where HIMS could potentially have a competitive advantage. Something else that could be potentially coming, which is not confirmed, is a testosterone compounded is going to launch with an at-home lab kind of subscription. Now we know that both of them are going to come online. The CEO said it, but we just don't know when. And we don't know how factual this information is. But they said that the 5-month plan is $139 for testosterone, which is not a lot. And it includes lab testing for free. And the 10-month plan is $100 with lab testing for free. Now, I believe the at-home lab testing is going to be a game changer for HIMS because it's going to allow them to go into the preventative healthcare, I should say, kind of plans, which is going to give HIMS more of a recurring revenue subscription model instead of people going into HIMS for a treatment and leaving. They're going to be entering HIMS ecosystem and they're going to be using the at-home lab testing for them to maintain their health. So they pretty much never leave the ecosystem. So it's going to make HIMS a more sticky business. Now, if you look at the HIMS multiple, it's trading at 3.6 times sales. The market was realizing the value. It went to 7 times. Now it's trading at 3.6. Guys, I truly believe 3.6 times sales for a company that's growing sales 55%. And I believe they can easily grow 20% over the next few years, especially right now. They're expanding in Canada. They're expanding in Europe. They still have $1 billion of cash, which means they can do more acquisitions or they could do a lot of different things. 3.6 times sales is dirt cheap for this company, especially on a relative basis to other growth stocks in this market. Now, HIMS has a goal of achieving at least $6.5 billion by 2030 and $1.3 billion in EBITDA. Now, you have to remember that HIMS has a history of setting low expectations so they can beat. They beat 11 out of 12 quarters. In fact, I believe the last quarter was their first quarterly miss since they went public. So they rarely miss on their expectations or miss on revenue guidance or earnings per share guidance. But $6.5 billion, in my opinion, is highly achievable. And especially, they said at least, and it doesn't include potential acquisitions, with $1 billion of cash. But I told you that HIMS is trading at 3.6 times. And I took in 3 different case scenarios. We're going to assume that HIMS is going to hit $6.5 billion in sales and it's going to trade at 3 times sales, which is a multiple contraction. Highly unlikely, especially once the NVO drama is over, 5 times sales and 10 times sales. Now, if HIMS trades at 3 times sales, which is a multiple contraction from here, this is 90% on the upside. Not bad at all. If they trade at 5 times sales, this is a $32 billion market cap, which is very likely, this is like the base case scenario for me, or 220% on the upside. If they trade at 10 times sales, which is the best case scenario ever, we get 65 billion market cap, 550% on the upside over the next 5 years. So to me personally, HIMS is by far one of the most interesting setups in the market, especially after the whole NVO lawsuit clears up. And maybe they're still gonna sue HIMS. I don't know, I cannot predict that. But I did a video explaining that even if they sue HIMS and they get rid of compounding in general, which is highly unlikely to happen, but let's say they do all those things, HIMS can still survive by selling generically regulated and other generic products. They have many products, they aren't just compounded. So to me, I'm looking at the leader in healthcare that's taking market share from the old players and that's disrupting a $1 trillion industry and is trading at 3 times sales. Doesn't happen very often with $1 billion in cash on a $10 billion market cap. So I like HIMS very much. I'm still bullish, still own the stock. And that was just my update for today. Hope you enjoyed it. Not financial advice. If you did enjoy it, please let me know in the comments and maybe consider subscribing. So I'll talk to you in another video.